Hey guys, what's going on? It's James Daniel here with eXp Realty out of San Pedro, California. So today I want to address the elephant in the room, which everyone seems to be talking about, is interest rates. And it's making it really hard for first-time home buyers to be able to afford their first home. Whether you're hearing it in the news, the updates on your phone, talking to your friends, everyone is talking about it. And I do believe there's some ways to navigate through this high interest rate market, which I want to talk about today. But I think at the end of the day, when you're looking to buy your first home, you need to focus on your monthly payment. Whether you find that monthly amount by working with your lender and doing some backwards math to figure out what that monthly payment is, or you're using one of the mortgage calculators online. I like to use a Zillow calculator. You put all your information in and it gives you a monthly payment amount. If that monthly payment is fine for you today, then it's something that you may look into. You can definitely refinance in the future to a lower interest rate when that time comes. It will just make your monthly payment lower, which will obviously is good for everyone. So I won't talk too much about it right now. Let's get into it, and I hope this information helps you. If you want more videos like these or just more tips and tricks to help you as a first-time home buyer or seller, please feel free to subscribe here. All right, let's get into it. All right, so number one thing to realize in a high interest rate market is you may have less competition. Back in 2021, 2022, when I was helping clients, I can just remember long lines outside the house. You go into an open house and there's just a table out front. They want everyone to sign in before they come in, and you're just packed and rubbing shoulders with all these people when you're inside an open house. And that can be daunting to a first-time home buyer. You're in this situation, you already got up to this point to prepare, and now you're out looking at houses and you have to fight amongst everybody in the city just to be able to win this house. And then if you do want to put an offer in, you're hearing back from the agent that there's 15 plus offers in, and these people are coming in way over asking. People are removing contingencies. It's just craziness. It can be very very, I guess, sad, and you're just kind of like, I've started this journey. I want to buy a home, but now it's tough. So I think in a higher interest market, not having as much competition. I just helped someone buy a house a few weeks ago. Just our offer and another offer. We were able to win and go under contract, which was great. But as I mentioned before, just two people compared to 15 plus people you're going up against. So definitely something to think about if you are wanting to buy a home in this market. Right off the bat, you're going to have less competition than you were 2 years ago. So number two, sellers may be willing to help pay for your closing costs or for a rate buy down, which we'll talk more to in the upcoming steps. But it was in the MLS, and I saw something in the notes that seller is willing to pay X amount for to help with closing costs or to help with the rate buy down, which can be very helpful into lowering your cost to the monthly payment that fits best for you. It can help you save more coming out of pocket when you're first buying the home by buying down some of those closing costs. And these are things that you may have an opportunity to receive that you didn't back in 2020 and 2021. Now, I know the inventory in this current market, especially here in LA, is a lot lower. So, it may be harder to get some of these credits, but it's definitely an option and something that is possible compared to where it was in 2021 and 2022. So number three, this option is called the temporary rate buy down program. And by using this option, you're able to buy your rate down over a select period of time before it gets back to the current rate. So for example, if the rate today is 8%, and you go with the 2-1 rate buy down program, it'll be 6% your first year, 7% your second year, and then it'll go back to the current day rate at 8% in the third year. But the hope here is that you're able to refinance out of that rate to go to a lower rate before it even gets back to 8%. The way you do this is first start off working with your lender to see how much credits you need for one of the buy down programs. So there's different ones like the 1-0 buy down, the 2-1 buy down program, even the 3-2-1 buy down program. So you're working with your lender to figure out how much money you need in credits to act from the seller in order to get one of these buy downs. Then you work with your agent to strategize. One technique I've seen people do is go over the asking price. So say if you need $10,000 in credits, the agent will put in your offer that you want to go in at $810, but you need $10,000 of credits in order to do a rate buy down, and that would be written up in the contract. So if the seller says, okay, hey, cool, we'll give you enough money in credits for a temporary rate buy down, then you're able to use a 2-1 buy down, and it'll be, just like I said before, your interest rate will be lower in the first 2 years. So definitely something to strategize with your real estate agent, with your lender, with, to help beat that interest rate temporarily, and then build a plan to hopefully refinance when that rate goes back down. So option number 4 is an adjustable rate mortgage, also better known as an ARM. And usually this is used to get a better interest rate than a conventional loan for a certain amount of time. So usually these ARMs can be anywhere from 3 years, 5 years, 7 years, 10 years. Downfall of this is that after those given timeframes with that fixed interest rate, it does become a variable rate. So definitely something that you want to work with your lender on to build a plan on how to use this best to your advantage. So I think one of the ideal ways to use this would obviously be getting into that fixed rate, and before it gets to that variable rate, being able to refinance that. But like I said, work with your lender on the strategy, but it could be a good one for you to navigate through this high interest rate market. And step number 5 is using home buying assistance programs. Whether you use a local program like here in Los Angeles, the Los Angeles Housing Department, or CalHAFA, which is more of a statewide government program, looking into those to see if you qualify. I'll have more videos that go into more detail on each of these programs to help you get a better understanding on these, but these can be helpful whether they're helping you with closing costs, whether they're helping you with the down payment. Definitely an option to look into to see if it's something you qualify and may be able to help you get into your first home. So with that said, to sum this all up, you really need to be comfortable with the monthly payment in this high interest rate market. Obviously, like I just went over, there are plenty of plans and ways to navigate through this, but if you're not comfortable with the monthly payments, then it's just really not going to work for you. So I think the next steps would be either talk to a lender, have them work backwards with you to figure out what that monthly payment is and see how much a home you can afford. You can also, when you're out looking at houses and you use a Zillow calculator, put the home cost in there and then see, play with the numbers and see where that monthly payment is that really works right for you. Or you can reach out to me. You can see my email here below. I would love to help you go over this math, help build a plan for you to get to where you need to be. So with that said, please feel free to reach out. I would love to help you. If this information was helpful for you, please hit the like button, hit subscribe to get more information like this moving forward. And I'll let you guys go. Take care. Have a great day. Ciao.